Hello and welcome. You are watching News 9 Live. I am Krishnakumar. We begin with the latest development coming in from the southern Indian state of Karnataka, where the State Assembly has passed the Cine and Cultural Activists Welfare Bill. This bill proposed to levy a cess on entertainment avenues like TV channels, OTT platforms and multiplexes as well. As a result, the state will be levying an additional 2% cess. This bill also requires companies to remit the cess by the 9th of every month. Karnataka's Labour Minister Santosh S. Lad took to social media platform X, formerly known as Twitter, and wrote, and I quote over here, "This bill will help more than 50,000 unorganized workers in the state's cinema and other cultural sectors. Thanks to everyone who helped pass this bill unanimously in both houses," unquote. Remember, the state of Karnataka has a 14% market share in India's box office, which is worth a total of 12,000 crore rupees. And a cess of 2% will mean 35 crore rupees outgo for the industry as a whole. That's the latest coming in from the state of Karnataka, where a cess has been levied on entertainment avenues, all kinds of entertainment avenues, from TV channels to OTT platforms and multiplexes as well. And this is going to have an impact of worth 35 crore rupees and will help 50,000 unorganized workers in Karnataka's film industry. Bear in mind, Karnataka's film industry contributes 14% of the overall box office market share of India, which is worth around 12,000 crore rupees. The cess on TV channels, OTT players and multiplexes has come into effect with the Karnataka State Assembly passing the bill today. Time now to discuss the continuing series of our Impact of Budget 2024 coverage, and we begin of this show with the impact of Chinese FDI. According to latest data, China has replaced the United States of America to emerge as India's top trading partner with $118.4 billion in two-way commerce. In fact, the recently released economic survey also pitched for enhanced Chinese investments in India, as in asking for more Chinese FDI to come into India amidst a challenging geopolitical landscape across the world. Let me begin by introducing Mr. Rakesh Khar, who joins us in the studio. Mr. Rakesh Khar, editor of News 9 Newsverse. Rakesh, talk to us of all countries from where India wants more FDI from. China seems to be the choice at the moment.
Well, I mean, I wouldn't say officially it's the choice, but it's quite in contemplation right now.
Yeah.
Suddenly it's become the most active piece of discussion in terms of the policy framework. Let me just put it in context, Krishna. First and foremost, globally, geoeconomics is driving geopolitics. That's the tenor, whether India's relationship with Russia or with US. And now in China, there is a challenge because we have a geopolitical problem. We have a border standoff with them, which is going on. And that border standoff led to several economic challenges in India-China relationships. Even as trade ballooned in the last 10 years, it has grown 4 times. So in that sense, trade has been going up and up and up. But FDI, that's a different, idea itself. So China presents an opportunity and a challenge both. Now the economic survey suddenly created a momentum about this particular story, and it's a big global story. Everybody is watching what next to come from the government of India on this. So economic survey again has to be put in context. Is it a defining or an abiding policy document? I have had an opportunity to speak to various economic advisors over the last few years. I am reminded of one particular conversation I had with Arvind Virmani. He was chief economic advisor from 2007 to 2009. He is currently the Niti Aayog member. So I asked him a point blank question: what is your KRA, Mr. Virmani? Is it to recommend only? Is it to forecast? Or there is some binding, relationship between what you prescribe and whether it's liked or not? So, he had a very categorical answer, which is very interesting in this context of the economic survey flagging the Chinese FDI need. So, Mr. Virmani said, we are asked to do about 10-20 ideas. We present ideas, some of our own, mostly of what we are asked for. That is very important here. If it is an ask for idea, even if it is an ask for idea, then there is some currency and movement in this. So, then this particular story came up in the press conference of the finance minister on the budget day. You remember that?
Yes.
So, she suddenly said that we maintain a arm's distance from the chief economic advisor. So, that put Mr. Virmani's conversation again in context, but she did say that I am not disowning the chief economic advisor. So, that is where we are. After that, in spate of interview that the finance minister has done, she has been saying that there is no idea on my table, but within the sections with the government there is a conversation. Now, yesterday Niti Aayog Vice Chairman Suman Beri told PTI that we are exploring it, but we need clearer guidelines. So, that is where the catch, Krishna, is. The catch is that FDI in India, as you would know, and you have been reporting extensively on this particular area, is mostly in the automatic route. And what we have done to tame Chinese investments as FDI, we brought in this press note 3. So, press note 3 is a neighborhood country kind of a diktat. So, if you have to transit from press note 3, which puts a curb on any investment from the neighborhood, which includes China, does not name any country, but is essentially targeted at China, because that is where we are looking at from investment. Then, should it go to automatic route, then where do the checks and balances come?
Okay. Fair enough. Good point there. Let us now talk to a policy researcher and corporate advisor. We have Dr. Srinath now joining us on the broadcast as well. Srinath, great talking to you as always. Clearly, one way or the other, a case is being made for Chinese FDI into India.
Yeah, I mean, here I want to pick what Rakesh left it at. I mean, he's been, I think, very diplomatic and kind. I mean, I would want to go one step and ask, saying, are these various think tanks and advisories, be it the CEA or Niti Aayog or the Prime Minister's Economic Advisory Council, almost all of them are very active in writing out various ideation papers, which is almost across Indian media all the time. Are these, let's say, ideation balloons, which also give a kind of deniability to the government or legislator at large, saying that let's test the waters and let's see what's the feedback that comes in. So, in a sense, is it like the track 2 of what the governments do? I would think probably yes. I think Chinese investments have been there for quite some time, but to look at the numbers that you showed, the FDI is very different from their other investments. And FDI has also have been having a challenge, right? We have taken a large standoff, let's say at least in the financial services space. RBI has been looking at every single Chinese investment, including the large Chinese lending app scams that we have had in the last 2.5 years. So, larger narrative about asking for China. Will it also come with technology transfer, considering that we want to push manufacturing, considering that we want to push through semiconductors, solar and others, because Chinese hold the reign, according to me, in all the technological IPs, whether they created it or not, they have it. So, the large question is, let's look at a simple example, citric acid. Very, very basic raw material component for food processing, chemicals and other things. In Indian pharmaceutical and food processing entities still have to import because it is a sheer global dominance and monopoly of the Chinese firms. So how will we break into some of those? By giving them access to bringing FDI capital into those sectors, will we be able to bring in those supply chain? I think that is a larger question. Right. I mean, the trade partnership is very different from FDI.
It's a good point to make and a good word to use, supply chain, and that's why I want to bring this conversation to Rakesh with, specifically mentioned about India plugging into global supply chain for many things. For example, its own ambitions in terms of creating, being a #1 manufacturer of mobile phones in the world will mean greater alignment with China, isn't it, Rakesh?
See, Krishna, we live in a completely interdependent world. I mean, globalization has been in currency for decades, and we've been looking at more and more globalization, except one particular period, that was the COVID period, when economic nationalism came into being. So, that debate, whether economic nationalism will overweigh globalization, I think we are today swinging towards globalization and more of it. So, in the interdependent world, you cannot produce everything yourself. You need the supply chain, and you cannot replicate being a China overnight. So, in that sense, to fill up your supply chain dream, you will have to bring in components from China. So, that reality has dawned on us, And it's important to point out here that CII just after the budget or maybe on the eve of the budget did make a formal presentation. So there has been a flurry of activities like Srinath mentioned the economic advisory, the finance ministry. CEA is part of the finance ministry. It is chief economic advisor to the finance minister of India. So in that sense, there is suddenly we have pivoted from a no, baat mat karo, China ki duro, to the reality that this is something that we need to look at.
Right.
Industry has made a pitch saying that we will get our dream of being the leader in that space cannot be met unless and until we allow FDI, and FDI will come with a certain checks and balances, maybe more in this case, where they have to invest and also bring in the skilled labor. I think it's going to be beginning with skilled labor. That's where visas is suddenly becoming a talking point.
Okay. Skilled labor, Dr. Srinath, my simple point is that we're even looking east, we're looking at the dragon simply because of the challenging global geopolitical climate because of which FDI from other sources are likely to dry up.
See, that's one aspect, but not really so. If you look at the, let's say, AI, quantum computing, or any of the deep tech sector, you will still get money from the western part of the world. And that's something that China has been trying, and there's a huge supremacy war between US and China. Who's going to first crack the quantum computing, the first 1000 qubit one? And India is nowhere in the picture, right? I mean, we have a very, very small budget when it comes to quantum computing. So we would need to partner and collaborate with other countries. But the challenge that, as Rakesh spoke about, economic nationalism, the reality is a lot of these emerging technologies are about supremacy. The one who controls that, AI, quantum, or deep tech, are going to control the narrative in the 21st century. So I think we'll be living in fool's paradise to think that we will collaborate and everybody would share technology very nicely and the sort of country bromance will happen. I think that's a challenge. And I think one of the questions that I want to rephrase the entire concept of FDI is, can it be actually frictionless? And I think that's a challenge for diplomacy.
Can it be frictionless? It's a very important question. We'll debate that question as well. But we need to take a very short breather here at this stage. We'll be back with lots more on the other side. Don't go anywhere.
This is News 9 Live, India's only digital exclusive live stream. For the early adopters, bringing you the news 24/7. For the smart audiences on the smartest TVs. News 9 Live. Stream now on your smart TVs.
जानना है तो देखिए, समझना है तो सुनिए, सीखना है तो पूछिए और कमाना है तो खरीदिए। जानकारी, सलाह और निवेश सब एक ही सुपर ऐप पर। पैसे का सवाल है तो जवाब है मनी 9। आजादी पैसे की, अभी डाउनलोड करें।
You're watching News 9 Live. I'm Krishnakumar and we are discussing the case for Chinese FDI, foreign direct investment into India. Rakesh, you had a quick point to make on that.
Yeah, quickly, first on FDI is easier said than done when it is an issue of frictionless. There will be friction when FDI comes, especially from China. But it's very important to point out, Krishna, that this no on China-India economic relationship is actually not a reality. The reality is that when it comes to oil imports, India and China have created a new economic bloc with Russia. The troika of China, India and Russia is a new reality, and they have reimagined the oil order globally. Point number one. Point number two, before that also, historically, China and India have aligned on WTO, and before that, the Asian Infrastructure Investment Bank, which is now the new development bank. India and China are the co-founders. So it's not that we haven't been talking to each other on economic matters. The clampdown on investment, many of the Indian large startups were a couple of years ago owned by Chinese. So that has also been scaled down. It's a reimagination so that the political sensitivity is not becoming a challenge.
Okay. Srinath, I want to take your quick closing comment on the matter.
So I think I agree with Rakesh that there will be competitive pressures despite collaborative efforts. The reality is that, but what the equation that we don't understand or we don't know is what happens if China is not a democracy. So if there is a power change, or let's say there's an equation change between India and Russia, if let's say the next time Russia goes through a power change, what happens to all the trioka that we try and build? Because the reality is once the Chinese are embedded into the Indian system, the question is, do we have adequate regulatory as well as judicial capacity to figure out or solve for those conflicts that might happen?
All right, Srinath, Sridharan over there, thank you so much for taking time out to be with us here on News 9 Live. Srinath, great talking to you as always. And of course, thank you, Rakesh, Khar, for taking time out to be with us in the studio as well to help us understand the case for Chinese FDI. Shifting focus away from that to gold, where in her budget speech, the record seventh consecutive budget speech, Finance Minister Nirmal Sridharan announced a cut in basic customs duty for gold to 6% from the 10% earlier. Following that announcement, the price of the yellow metal has dropped by over 5% on the MCX, or the multi-commodity exchange. Now the big question is on the minds of Indians who love gold, who love buying gold both for traditional reasons as well as for investment reasons. Indians who love parking money in gold, the question on their mind is, will the prices of gold fall further? And more importantly, is now the right time to buy gold? To answer that and more, we have my colleague and friend Suyash Maheswari joining us in the studio first. Suyash, talk to us. Is this a positive for the gold market or is it not? Because technically, a positive is what sends the prices up. But this makes gold more affordable. So in a sense, it's a positive for the consumers, isn't it?
Yes, and that's actually a very good question to ask, because, you know, the custom duty has been cut, but the prices have fallen. So in the mind of your average viewer, it would be like, how does it impact me or how does it boost my investments, right? But overall, it's a big positive as it will bring down the overall cost of importing. You see, the BCD the basic custom duty has been brought down from 10% to 6% now on gold. So the overall, the total import duty has been reduced from 15% to 11% now. And as you also rightly pointed out, the prices have declined substantially by about 5% on the multi-commodity exchange. And by the way, this is not just because of what was announced in the budget. There are some global factors at play over here as well. Internationally, the prices have declined by about 3%. And this was after, in the April-June quarter, US economy rebounded at a faster pace than was expected. It jumped by about 2.8% on a year-on-year basis compared to expectations of a 2% rise. Now, as we know, if the economy continues to run hot, the chances of a rate cut goes on, and that is bad news for non-interest bearing assets like gold. But coming back to how this is positive for gold, overall the prices have gone down and the demand for gold has surged, skyrocketed. In fact, Krishna, I was reading some of the brokerage reports that the footfall in jewelry stores have gone up significantly, and the demand for overall for the yellow metal as well as silver has gone up by almost 20%. Also, this reduction in the the customs duty will address one more issue, which is called the gold smuggling issue. Now, I was reading this report from Malabar Group. The duty cut reduces the cost of importing 1 kilogram of gold from 9.82 lakh rupees to just 3.93 lakh rupees. So, smuggling gold is less profitable for the smugglers and it's more manageable. So overall, there are multiple facets to this, and again, as I rightly pointed out, it is a big positive for gold prices.
Okay, it is a big positive for gold prices, and it's also the way it looks like right now. It is a big positive for domestic gold sellers, domestic jewelers, because the whole idea of cutting down the import duty on gold is that Indians don't import gold. Right. Now that doesn't help anybody, does it?
And certainly, as you made a good point over there, again, it's a big positive for your jewelers as well. And their stocks have skyrocketed. Look at Titan, look at Senco, look at Kalyan Jewelers. On the budget day when the announcement was made, the stocks rallied by about 6 to 8%. We have seen some bit of a profit booking since then. But again, the 3-day impact overall, it's positive. They are up by about 3 to 4%. So certainly, their profit margin would definitely increase because the cost of gold has come down. But for the consumer's standpoint, I mean, when the gold was trading at the all-time high of about 74,500 rupees, a lot of the market, at least from what I was reading and pick up from experts, was that people were sitting on the sideline and waiting for gold prices to come down before they could, start buying gold.
Good point you make, because like the stock markets, like real estate, gold prices have been going through the roof, in the run-up to the budget, wasn't it?
Certainly, Krishna. And actually, this is one of the years where gold has, in fact, outperformed Nifty. Gold is up about 15%. Spot gold I'm talking about here on a year-to-date basis in 2024, whereas Nifty is up somewhere around 12 to 14%. Your Nifty is up about 13%. Mid-cap and small-cap, of course, have generated better returns. But again, as we know, it's a riskier asset. But, since the prices have come down and the expectation is that the US will probably move towards a rate cut by September and there could be another rate cut by December, it's a big positive one for gold and other precious metals because they are non-interest bearing. So once the interest on or the yields come down, it makes gold more attractive. Let's not forget that the festive season is also right around the corner. So demand locally is also expected to go up, Krishna.
So if demand locally goes up and then customs duty is cut, so are you talking to us about a situation where the domestic prices of gold will grow faster than the global prices?
So that actually, basically, obviously, so gold in different markets trades at different prices. So of course, when we talk about financial assets, there is something called arbitrage where, you can buy it in a cheaper market and sell it in a more expensive market. But when it comes to gold, this reduction will align us better with international prices. As I also pointed out, gold prices in India has reduced by 5%, but globally also we have seen an impact and there are multiple reasons for it. One, of course, because the numbers from US have come in hotter than expected, which again lends to the argument whether the US Fed will go for an interest rate cut and when it will go for an interest rate cut.
The reason why I'm asking you all this is really simple. One is buying gold jewelry. Gold jewelry prices come down. You want to buy jewelry for a wedding. You want to buy jewelry because you like buying gold jewelry. Indians love buying gold jewelry. So you go do that. But what about gold as an investment option? How is an investor supposed to look at gold? Is it a good time to buy? That's a big question asking.
Yes.
Is it a good time to park money in gold? Because how do you see gold prices behaving from here on? Will they stabilize? Right. Will they go up? Will they go down?
Yes, so just as a disclaimer, I'm not a registered investment advisor, but that's a very big and
Neither
important
of us
question.
Are actually.
Neither of us are a registered investment advisor, but again, as I mentioned, the demand for gold was obviously there, but when the prices have shot up so significantly by 20-25% in a matter of years, the common man was sitting on the sidelines and waiting for the prices to correct. Now, since the prices have come down because of a lower import duty, it does not mean that the asset price overall the value has come down per se. It's just because of the cut in taxation that the prices of gold are more attractive in the domestic market. So it should ideally not hurt demand, and we are seeing some evidence of it. As I rightly pointed out, I mean, the footfall in jewelry stores has actually jumped up significantly. Demand overall, Krishna, has jumped by 20%. So people still want to buy gold. They are just waiting for the prices to stabilize now. So that we would need to figure out by when will the price of gold stabilize from here on.
All right, let's get in some expert view on that since neither of us are registered investment advisors. We have Mr. Kunal Shah, Head of Commodities Research at Nirmal Bang, now joining us on this broadcast. Kunal, talk to us. Is this the right time to buy gold in India? Kunal, if you can hear us.
I strongly believe, I was hearing your conversation and I strongly believe that whatever you are saying is absolutely right. The value of gold is not going to go down in times to come. The prices of gold have come down in India and even in the international market because of multiple reasons. There is a slowdown in China. China is not buying gold from last 2 and even perhaps this will be a third consecutive month where every month where the Chinese central bank were buying 18 to 15 tons of gold, they are not buying anything. So that is one reason. Second, Indian gold have gone down because of 9% slash in duty. So I think for people who have missed the bull run, they were looking at the gold price when gold was trading at 75,000 rupees and they were saying that we missed the bus because prices rallied from 60 to 75 and then there was this kind of correction. For them, all these people, they have now the opportunity to buy gold again. And one more thing, that remember the redemption of sovereign gold bond is going to take place in times to come. 1 lakh crore worth of redemption is going to be taken place. And if the 9% duty cut, that means government will have to pay 9,000 crores less as compared to what they were supposed to pay. Right. So there are many angles to this sharp cut in the import duty. Whatever government has done is perfect. There was no need for this unwanted smuggling of gold in India. I mean, the number was quite high, as a lot of people say that 300 tons. So I believe looking at the way geopolitical uncertainty is prevailing, looking at the way the de-dollarization taking place, looking at the way Western central banks are going to cut the rates, gold is a hedge. It's an insurance against all these uncertainties, and it's a great buy. So this
so
is
it's very
the
clear.
right time to buy
Kunal
gold.
Shah there of Nirmal Bank saying that it is the right time to buy gold. That's the word coming in. Kunal, thank you so much for taking time out to be with us here. Kunal Shah, Head of Commodities Research at Nirmal Bank. And of course, Suyash Maheswari for being with us in the studio. And with that, we've completed run out of time here on the show. Thank you so much for watching. This is Krishnakumar signing off.
Cooking is an act of love. The first act of love we receive from our mothers in the families.
Modern Indian food is all about contemporary and innovative approach to traditional Indian cooking.
The presentation it's also important, you know.
I want to wear this white coat every day and then be a chef.